Good morning and welcome to the Killik & Co market update. It's been another positive week for markets, and the S&P 500 has now pretty much recovered from that blip a couple of weeks ago, as you can see on this one-year chart. One reason for the more positive moves this week has been the publication of the latest minutes from the last Federal Reserve meeting, and they showed that a rate cut in September is very likely indeed, and that is good news for stock markets. The expectation of a rate cut has caused a slight weakening in the dollar. This chart shows the strength of the dollar against a basket of foreign currencies, including sterling and the euro. You can see that the dollar tends to strengthen significantly in times of global economic uncertainty because it's viewed as a safe haven. Look at that spike in 2020 when the world went into lockdown, and the spike in 2022 when inflation was rising and Russia invaded Ukraine. Over the last couple of months, you can see a weakening in the dollar. And this dollar weakness may be one reason for the continuing rise in the price of gold. Here it is over 10 years. It hit a new record high this week. Gold trades in dollars and is therefore cheaper when the dollar is weaker. Gold also doesn't pay an income, so it's relatively unattractive when interest rates are high and relatively more attractive when rates are low or expected to fall. Gold is also viewed as a safe haven, so the strength could be a signal that some investors are fearful. But on the other hand, the stock market is also close to a record high, which would not be the case if lots of investors felt fearful. Despite the strength in the gold price, it has been quite a rocky few years for gold miners, but some of them have started to show strength more recently. One example is Newmont, the biggest gold mining company in the world. Shares are up from $30 in February to over $50 today. There continues to be a focus on the amount of water being used by data centers. Lots of new data centers have been built in recent years due to the AI trend, and they need huge amounts of water for cooling purposes. A lot of these data centers are in a part of Virginia that's known as Data Center Alley. The consumption of water in this area has grown from 1.13 billion US gallons in 2019 to 1.85 billion gallons last year. Virginia is a state that suffers from drought, so this ongoing increase in water usage is not sustainable. There is an opportunity here for companies that are involved in the efficiency of water usage, examples being Xylem and Ecolab. Interestingly, both of these companies have outperformed the S&P 500 over the last year. And finally, Ford has become the latest car company to reduce its electric vehicle ambitions due to lack of demand from consumers. Ford had been planning on developing an electric SUV, but it's cancelled those plans and is now going to develop a hybrid SUV instead. And the change of plan is likely to cost the company $1.9 billion. Shares across the car industry have suffered recently. Here we're comparing BMW in the green, Volkswagen in the pink, and Ford in the black. All of them rose in 2021 when there was quite a lot of excitement about electric vehicle plans, but they have declined since then as the demand from consumers has not been as high as hoped. Moving on to have a look at next week, the big focus will be on results from Nvidia, which are due out on Wednesday. That's it from us. Have a great weekend, and we'll see you next Friday.